This is J-Dub here, and what a start to 2010 that we've seen so far in the markets. So let's go ahead and take a look and see what's going on and really what's up here for the next several months. Okay, I know you guys aren't charts people, and I wouldn't expect you to be, but let's just do a quick update, see where we're at here. Here's a chart of the Dow Jones for the last, since March through today. You can see there's a nice run up here, and that was pretty much as expected. And things have been selling off here lately. And let me go ahead and add some additional points here to the chart. You can see here when I sent those other videos to you here, and ever since the second video, which was in late September, the market has continued to increase an additional 10% since there. So obviously, I thought it was imminent at that time, and fortunately, I'm glad to be wrong on that one. Because that would give you guys some more time to head to the sidelines. And you can see here over the last 60 days, ever since that 10% run up, or actually 30 days, we're only about 3% above where that video 2 was sent out anyway. So we pretty much have given up all those gains over the past 3 or 4 months. And so let's zoom out here a little bit and look at the all-time high of October. That would be the high point on this chart, and see exactly what's been going on. So we had the large sell-off. Ever since that large sell-off, since March of 2009, we've retraced 53% of that sell-off that we occurred from 2007 through 2008. So again, let's go back. Let's take a look at the Dow, and here's a different look at the Dow, and let's put those same types of points out there. You can see from the high to the low, we've retraced about 52% of that. Now the interesting thing about this purple graph that I'm showing you here is that indeed this is the Dow, but this is the Dow from back in 1929 and 1930. So you can see here that little inset that I showed you was the first portion of the sell-off that started off with the Great Depression. And when you put this in context, talking about how markets have rhymed each other, this is pretty incredible how one in 1929, 1930, it rebounded 52%, and this year we rebounded 53%. And again, we're starting to sell off. So pretty interesting to look at it that way. And of course, if we were to take a look at where we are right now, this is where we're at. So we've got a long way to go to the downside, assuming that this indeed does hold out, and I'm fairly confident that it will. So what do we need to do? Well, you need to run and don't walk to the sidelines. 401ks, pensions, bonds, anything and everything is pretty much at risk. Tremendous risk out there. The safest thing is dollars, US dollars, if you can have physical cash. But of course, there's risk of loss or damage or fire and all that kind of stuff. So there really isn't a lot of good options. You just have less bad options at this point. And even cash in the bank is not going to be safe. You talk about FDIC insurance, but basically the FDIC has no money. And so what good is the insurance if there is no money behind that firm? So it's going to be a rough year. And purpose of this video is just to show you the rhythm and the rhymes that we've had now versus the Depression, and we're in the beginning stages of that. So wouldn't it be nice to know if it's possible something like this could happen again? And so take action as you see fit, and we'll keep providing you some updates from time to time. Thanks for listening.